Hi, this is Zak Mir with the Bulletin Board Heroes here on Vox Markets for Monday, the 19th of July, Freedom Day, and stock market celebrating in its own way with a triple-digit decline. But here we've got Avacta to start, and we've got a rising trend, support line here from back in November. That's running around the £1.25 area. We bounced off that on Friday and making progress today despite the gloomy conditions. Initial resistance there at 145, above that up to 160, which was support on the way down, and obviously an end of day close back below that line wouldn't be a good look, but so far it looks as though the shares may be able to resist the selling pressure. On to Alpha Growth, which rather surprisingly fell back from its peaks earlier in the spring. Here we've got a situation where the shares look to have found a support line there. That's one from back in February. That's running around the 3.9 pence area, and so that was also the sort of the resistance on the way up. So the peak in December and in March around the 4 pence level. End of day close, I suppose, above the initial July resistance 4.35 would be a good look for this stock, and would promise that the shares might head up towards 5.25 pence, the area of the 50-day moving average. Overall, rising 200-day line, rising support line there as well, and support above old resistance or at old resistance means that this stock is looking rather better than many are at the moment. Those who like a binary situation need to look no further than Amigo, and here we've got a situation where shares have actually gapped up after this sideways consolidation that we've had, I suppose, between 7p and 10 pence since the end of May. The real sort of the noteworthy point really is just the way that we've got the stock gapping up today. That is a potential sign that there's going to be at least an intermediate move to the upside. But obviously at this stage, 10 pence looks like the best that's on offer for the shares, but percentage-wise, I suppose that's not a bad gain, and obviously this could be the start of a recovery if, as I said, you like those binary bets. Stock today, which has done understandably rather well, is Audioboom, the potential transaction from All Active Asset Capital. And here we've got a situation, we've got this rising trend channel. I think I looked at the stock a while back, and although it seemed to be rather high, the promise here is that it could actually fulfill the target, the offer target around the £12 level. Gapped up today, and really the key here is that we get a decent end of day close above the previous £9.40 resistance from back last month. And if we can get that, then the £12 level seems to be in accordance with the technicals and the fundamentals both tying up quite nicely. Stock which has been on the back foot of late, but has stabilized in recent sessions, is Galileo Resources, breaking that falling wedge last week with a long candle through the 1.25 pence area, holding 1.25 pence, and we could head back towards the area of the 50-day moving average around 1.5 pence over the next week or two. The other plus here is the way that the 200-day line is still rising, so that could provide decent momentum for the shares, as does the bullish divergence in the RSI window, with the slightly lower low for the second part of July versus the initial support that we had there around 1.17 pence just at the beginning of the month. Moving along to a different sector here, Jkx Soil and Gas, which used to be a favourite amongst the punters. Obviously, in the near term, punters might be rather down in the mouth at the moment, so not so good. But here we've got a rising trend channel that could be possibly taking the shares up towards the mid 30 pence zone, up to 36 pence, in fact, perhaps by the end of next month. And that's particularly favoured while we hold above last week's support area at 26 pence, only really back below the bottom of the recent range, and that 50-day line around 24 pence really delaying the recovery argument for Jkx. We're thin on the ground obviously today with the fall in the market, but another stock which looks as though it's well supported is Mobility 1, rising trend channel here from the beginning of March. Rising 50-day and 200-day moving averages as well, and bounced off that price channel floor on Friday at 23.5 pence. While there's no end-of-day close back below that, then I'm looking for 30 pence initially, and then best case scenario target over the next 2 to 3 months as high as 50 pence, but I think probably most people settle for 30 pence over the near term on that situation. Stock which many claim to be obscenely undervalued is United Oil and Gas. Here we've had bear trap rebound from below the 200-day moving average at 3.7 pence. Gapped up today, so that suggests there's been some buying interest in the stock, even on today's rather wet market conditions, or soggy market conditions. We're also potentially breaking a falling wedge for the shares from back in March, but we do need to see an end-of-day close through the 50-day moving average of 4.25 to really get the shares moving, and then hit their potential target of May resistance around 5.5 pence. But at least while we're above Friday's floor, around 3.55 pence, are looking slightly better for United at the moment. One of the best performers of the year on any market, and particularly the Aquis market, is Valereum blockchain. Here we've still got the shares, despite their pullback from 80 pence, still got the shares in this rising trend channel, looking for an end-of-day close really through 49 pence. That's where that resistance line from June is. Through that, and we could be on the road for a new leg to the upside. It would be then a sort of an echo of what we saw in May, where a break of the 1 month resistance line there around the 30 pence level took the shares up to 80 pence. On this occasion, while we hold above recent support around the 39 pence level, well, actually we had that back in June, but while we hold above recent support around the 42 pence level, looking for as high as £1.10 over the next 2 to 3 months, above the 40 pence area up to £1.10 on Valereum, after all that sort of explanation. Finishing off with Zinwald, which has been, again, a decent performer. Zinwald Lithium. Here we've had a bounce for the shares off that last little low that we had at the end of June at 18.5 pence, and above 18.5 pence, looking to retest the initial resistance of this month up towards the 25.5 pence level. And that could be seen over the next 2 to 3 weeks. That's it for me today. More updates tomorrow.